This is trade planning with options. Katie does amazing work here. You're going to not only see her analysis on gold, but you're going to see positive setup based on this analysis, looking at /GC, and she's going to use the Tastyworks platform to illustrate some bullish strategies that you can use. And then we're going to show you how to sign up for Tastyworks right through our website. So, Katie, show them this great work.
Hi, this is Katie with askSlim. On your screen is the Cycle Low Timing Tracker, which is a tool we develop for our members to identify opportunities that may be setting up around cycle bottoms. Today we're going to focus on gold futures /GC. It is found on the Cycle Low Timing Tracker in this bottom confirmed box for the weekly time frame. That means that gold futures have exhibited enough positive price action on the weekly chart to trigger the bottom confirmed algorithm for that time frame. Also, I want to point out these two colored boxes next to /GC. Those show a combination of cycle phasing and momentum conditions that we can quickly just take a glance at, and you can see that both the intermediate term and short term boxes are green with positive conditions. Also, tomorrow's Cycle Low Timing Tracker will show /GC in this box, the cycle timing box for the daily time frame. So that'll be a period of time of approximately 7 days when we expect the current daily cycle to form a low and then begin to move up into the rising phase of the next daily cycle. Now let's go over to the chart and see what that looks like. This is a 5-year weekly chart of gold futures. These large gold cycle brackets on the bottom represent the dominant cycle in gold futures, 72 bars in length. That dominant cycle is broken down into minor quarter cycles of 18 bars in length. And we have also overlaid the silver future cycles on here, and those are these dashed silver cycle brackets. These blue vertical dashed lines over on the right here show a period of time of a few weeks around the ideal cycle low, which is shown right here, and that's when we would expect a bottom to form, and for gold futures in this case to move up into the rising phase of the next cycle. Well, you can see that the gold futures went through quite a bottoming process in here and finally moved up into that rising phase now found in the bottom confirmed box for the weekly time frame on the Cycle Low Timing Tracker. So we are currently just a couple weeks off that intermediate low. Momentum has turned positive in here as represented by our proprietary momentum indicator, the reversal scout. We do have a resistance zone up here, so we will want to watch this area carefully. The bottom of the zone is at about 1794 and the top is at about 1903 with the midway mark at about 1848 and a half. You can see with this blue dotted line that our initial projection is to the top of that resistance zone. Now let's switch over to the daily chart. Notice the blue vertical dashed lines again. Those represent the daily cycle timing window, a period of time around the ideal cycle low on the daily chart, when we would expect this current cycle in gold futures to form a low and then begin to move up again into the rising phase of the next cycle. That period of time starts on Friday, November 18th. Now we have a support zone here. It starts at about 1725 and a half on the top to about 1684.60 on the bottom. And what we need is for that zone to hold as gold futures retrace into this timing. Now, momentum on the daily chart is positive with both the reversal scout as well as the slim ribbon. The slim ribbon colors the candles green, gray, or red depending upon momentum conditions. So what we want is for gold futures to retrace into this timing window, for this support zone to hold, and then for gold futures to begin to move back up again into the rising phase of this next cycle. Now we can use the slim ribbon PO down here For a signal, if momentum remains positive during the retracement and then price turns up, we may get a momentum continuation signal to the upside. We could also use the lower time frame charts, such as the 2-hour chart. Currently, momentum is negative on that chart, so we could watch for it to turn positive again, and that would set up a possible long side entry in gold futures. Now let's go over to the Tastyworks platform and talk about a couple of possible setups in gold futures. Here is the Tastyworks platform. I have /GC loaded in here, and two things to notice here. First, the IV rank in /GC is low, currently 12.9. That would suggest long premium strategies that would benefit from a vol expansion. The second thing to notice is that there's going to be a roll. These next 3 expiration cycles right here are all in the current contract. And after that, we'll be in the next contract. Notice the difference in the pricing, just a little bit different. So that is something to be aware of. As far as which expiration cycle to choose, I'd like to give myself some time. I'd be inclined to choose, say, the December 12th expiration cycle with 25 days to go. You could also go out to the December 27th with 40 days to go, somewhere right in that range. So for demonstration purposes, I'm going to use the December 12th expiration cycle. So we're going to pretend that we got our retracement into that support zone already and are now moving back up with a signal on, say, the 2-hour chart or maybe the slim ribbon PO. Now, when that does actually occur, your strikes will be different than what I am going to demonstrate right now. So you could simply go in and buy a call. For simple purchases of a call or a put, I like to buy an in-the-money option that already has some intrinsic value. I use the strike that's right around the 7D delta, so that would be the 1745 strike. And you would be paying a debit of $45.60 for that. Of course, that's $4,560. And that's also the amount of capital that you would have to put up, and it is your max loss. Now, if you move closer to at the money, you're going to pick up fewer long deltas. You'll notice that this is 70 deltas, and of course, that is what you've got. If you move closer to at the money, you get fewer and fewer long deltas, but you will also pay less for the long call. Now, the simple purchase of a long call gives you unlimited profit potential to the upside and capped risk at the amount of the debit that you paid. If you were to hold this to expiration, you will notice that you need to clear the debit that you paid in order to begin making a profit. That's shown on the risk graph here. With these red and green areas. Where this green profit zone begins is your long call strike plus the debit that you paid. Again, that's if you held to expiration. Now back to the table view, another long premium trade that you could do in here would be a call debit spread. That would be buying one in the money call and selling one out of the money call to reduce your cost basis on that long option. Now you can make the debit spread as wide as you want, even down to just a $5 wide spread. This would have you paying a debit of $250. That's your max loss and your capital requirement. Your max profit is also $250. A $10 wide spread would have you paying a debit of $480, which is your max loss, and your max profit in this case is $520. Now, of course, those are not the only long premium strategies that you can use, and even these that I've demonstrated can be customized to suit your trading style, account size, risk tolerance. To follow our options trade ideas and to learn more about all the tools and services that we offer, as well as about our marketing partnership with Tastyworks, please come and visit our website at askSlim.com.